Welcome, ladies and gentlemen, to Commodity TV and a new edition of our online interview series. We want to get an update today from Gold Royalty, and David Garofalo, the famous CEO, is here with us. Good morning, David. How are you?
Good morning, Johan. Good to
Yeah,
see
good
you.
to see you. Thanks for taking the time. I'm a shareholder of Gold Royalty. I want to disclose that upfront, and I'm a long-term shareholder. That is also for sure, because I love to collect my dividends, because that company is paying quarterly dividends. Yeah, you guys doing an outstanding job, but that is exactly what I have expected from you, David, as you are a long time in the mining sector. I mean, you guys have now grown to 216 royalties. That is amazing.
It's actually
Oh,
222 because we
Jesus.
continue to generate royalties organically, 2 to 3 a quarter. So it's hard to keep up,
Yeah.
but we are continually growing and doing so very cost effectively with high rates of return.
Super. Yeah, sorry, I had a 216 here from a press release, but probably that was a bit outdated because a press release is like 2 weeks old. But anyhow, let's talk about the last year and also the first quarter. I have the impression, because you have a super large CAGR growth rate per annum for the next years in the plan, but it looks like that you are executing on that because everything is rising, right?
It is. We've seen record revenue almost quarter over quarter, every quarter since our inception. And the big drivers of that 60% compounded annual growth in revenue through the end of the decade are three of the biggest producing gold mines in North America: Canadian Malartic, Cote, which comes into production next quarter, or next year, I should say, and also the underground extension of Goldstrike, Ren, Barrick's biggest producing gold mine in the United States.
And also, I think Odyssey South was in March also large. The first production blast occurred, right?
That's right. So that's the underground extension of Canadian Malartic, upon which we have a 3% NSR over a significant proportion of the underground resource. And that resource is growing. As Agnico Eagle gains access for production, they get better drill setups for exploration drilling as well. So even though they already have a 20 plus year reserve life, we think that's likely to extend. The other interesting aspect of that royalty is we have significant royalty coverage on surface across a lot of their contiguous land position. And given the spare capacity they're going to have in the mill as they convert from an open pit mine to underground, they're going to be looking for satellite feeds for that mill to fill the mill. And we will have royalty coverage on what we hope will be new discoveries, new satellite zones, which will feed the mill.
Okay, super. That would then extend the mine life and extend your royalty, of course.
Exactly.
Super. How does it look like, let's say, with your financial streams? What I did not really understand was total revenue and option proceeds. That was $2 million altogether, but in the revenue you had in the last quarter $767,000. So what is an option proceed?
Yeah, option proceeds are payments made by the operators to us when we farm properties out for them and take a royalty back in return. That's part of our organic royalty generator model. We have a gentleman in Reno, Nevada, Jerry Boffman, another gentleman in Val d'Or, Quebec, Glenn Mullen. All they do is stake exploration claims around existing mines and deposits, and they farm those properties out and they take back a royalty in return, and they also take on work commitments on those properties from the operator, and also option payments, exploration option payments. So that's a meaningful part of our revenue generation, and that's why we continue to grow not only our royalty revenue but our option revenue as well. So we generate those royalties effectively for free. As I said, we generate about 2 to 3 of those royalties every quarter, effectively through the sweat equity of Glenn and Jerry. It costs us nothing to do that. The rates of return are infinite. As you can imagine, those option payments are coming into us at no cost to us. And we generate those royalties organically, internally, with no additional cost, no incremental costs. So that's why one of the reasons we have over 220 royalties, 60 of our royalties were generated internally, organically, for effectively no cost, just the sweat equity of our employees.
Okay, wow, super. Like to hear that, honestly. So you have received 406 gold equivalent ounces last quarter. If I take that, let's say for the rest of the year, you should have between 1,600. Hopefully, it goes to 1,800. Is that something you would say that's okay?
Yeah, and if you look right through to the end of the decade with 60% compounded annual growth every year, we expect our revenue to grow to about $60 million per annum using long-term gold consensus prices. And the big drivers again of that are the Odyssey underground and Canadian Malartic coming into full production as they start to produce from the shaft. Right now, they're just going through a ramp up from ramp access, so it's very limited production. But as they get underground and use that large-scale shaft to full effect, we're going to see a significant increase in our revenue. We're also going to see a step change in our revenue from the startup of production from Côté, which is IAMGOLD's new gold mine and will be Canada's second biggest producing gold mine. And we have a royalty on the highest grade portion of the open pit. So that'll represent a very significant change in our revenue starting in the first quarter of next year. And then finally, the underground extension of Goldstrike, which is Newmont and Barrick's largest producing gold mine in Nevada. As they go to the underground extension of Ren, the grade will increase dramatically there. We have an exclusive royalty on that underground extension, and that will represent another significant step change as they incorporate that into the mine plan. The grade on that resource is 7 times the grade they're mining from the open pit. So as you can imagine, Barrick is putting a priority on integrating that into the mine plan in the short to medium term.
Okay, so when would you say, with those large projects, when would you say we will see a significant jump in the revenue of the gold equivalent ounces? Because I could imagine if one or two of those large projects go in full production, let's say commercial production, yeah, or they are already, of course, but if that really hits the what we want to see, yeah, where what jump would that be? Is it like then that you go from 2,000 ounces to 5,000 a year and then to 10,000? Is that something which would be possible?
That's actually roughly the trajectory you're looking at through the end of the decade. And it's in a staged basis. So we have almost a doubling in our revenue next year from about $6 million to $12 million. The big change there will come from Côté, which comes into production next year. And we have significant royalty coverage on the highest grade portion of the open pit, which will be mined early on in the mine life. So we're going to get a very quick payback on that royalty investment that we made about a year and a half ago. And then you're going to see the underground extension of Goldstrike come into production, we believe, in 2026. But you'll see a gradual ramp up in production from the Odyssey mine, which is the underground extension of Canadian Malartic. As I said, right now they're mining on a limited basis from a ramp, but they're sinking a very deep shaft there. When that shaft is completed by 2027, you're going to see a significant pickup in production there. So it's very staged, 24, 26, 27. That'll get us through to that $60 million over 10,000 of gold equivalent by the end of the decade.
Okay, and that is of course a significant jump then in revenues because we think that gold should be at 3,000.
Yeah, that's right. I mean, it's an excellent point, Johan, because we're using consensus gold prices, which are just under $1,700 an ounce in our revenue projections. We provide significant leverage to the gold price, and we're a very scalable business. You know, we have very few employees, we have very low G&A costs, so every incremental dollar of revenue growth goes right to the bottom line and increases our potential to ramp our dividend up. We already pay over a 2% yield, but we think we can ramp that dividend up as we start to grow our free cash flow. What's remarkable about our story is we only started 2 years ago. We IPO'd 2 years ago. And by next year, 3 years after our IPO, we're going to be tipping into free cash flow positive. That's remarkable for any startup business in any industry.
Yeah, absolutely. That's right. What does the rest of the balance sheet look like? I mean, what credit lines do you have? Is there any additional debt, or what is cash so far in? Can you give us a bit of an idea?
Well, we have zero net debt, and we have a $35 million line of credit with the Bank of Montreal and National Bank Financial, which provides us additional firepower to continue to acquire royalties. But even if we don't acquire external royalties, as I said, we continue to grow our royalty portfolio out organically at no cost to our shareholders, no dilution, because we have that capacity internally with very, very capable individuals, prospectors who've been doing this for well over 30 years and adding royalties for free, getting option payments from our operators, again, for no cost to us. That royalty revenue and that option revenue is really an intrinsic part of our business model.
Okay. I saw also that you published a sustainability report and an asset handbook. What is that?
Well, the asset handbook provides granular detail, on each and one every one of our 222 royalties. So if you're looking for more detail about the
Hmm.
royalty coverage, who the operators are, the resource profiles, that's all in the asset handbook. The ESG report was also published on May 1st, so they were both published on the same day. Again, that's remarkable that we were able to do that only 2 years after our existence, after our IPO, that we've already ramped up.
Hmm.
That's the type of reporting transparency you would see from a senior royalty company in the space. And the reason we're able to do that so quickly is because of the depth and breadth of our management and board. We have collectively over 400 years of industry experience. So we've built companies before, we've built mines before, which is unusual in the royalty space. Many of the royalty companies are run by financial engineers. If you look at our board management, what you see is a lot of capable mine operators, mine builders, which gives us two distinct advantages. One is a clear-eyed view of the underlying risk of what we're investing in, but also gives us access to opportunities. And I would say the added advantage is we've built companies before. We understand the transparency of reporting that's required from the most senior companies in our space, and we're able to ramp up that transparent reporting very, very quickly as a result of that experience.
Okay, super. So that's let's call it a preparation also for the future to be already with the big boys in the game.
That's right.
Super. You joined also the United Nations Global Compact. What is that?
So again, what that provides is some standards around our ESG reporting,
Hmm.
and it basically forces us to adhere to certain UN principles on sustainability and reporting on our sustainability practices. So we're very proud to become a signatory of that convention, and that's underlined our ESG report. Our first ESG report was prepared on that basis.
Hmm. Okay, super. Last but not least, let's talk about gold. What's your view? I mean, we are still around the $2,000. I think it should be significantly higher. We said it already in the last interview. We had tried to go to the to let's say to cross the 2,100, but it looks still like that we had one backslash here. But what is your view for this year?
Well, we still have quite a bit of runway. We believe in the gold price, and I think what's going to happen is at some point over the course of this year, the Federal Reserve and other central banks globally are going to signal a pivot. And what that will do is very firmly entrench inflation for the foreseeable future. And certainly in their interest to do that, given the amount of debt that's been strapped on globally, relative to where we were in the inflation cycle in the 1970s. Today, debt to GDP is 350%. Back in the 1970s, when we last had significant inflation, it was only 100%. So as you can imagine, the central banks back in the 70s and 80s had quite a bit of more latitude to raise interest rates to tame inflation. They don't have that kind of flexibility today. That would bankrupt governments and undermine confidence in fiat currency. So, what I think will happen is a massive expansion in money supply again. We're going to see interest rates pivot, and that'll drive the gold price up because gold is the one currency you can't print.
That's exactly the same thing, same point I have here. And I think yesterday Goldman Sachs published, or it was last night, they published a real nightmare about their real estate for corporations. I think there are six times higher numbers in credit defaults, or let's say clients not paying. I mean, that's a lot, isn't it?
It is, well, you just have to walk into any urban center, and
Uh,
I can see it here in Vancouver. I've been to Toronto recently.
uh,
There's a lot of empty commercial real estate. There's going to be a reckoning in that regard. There's going to be a significant mark to market on commercial real estate, and I think that'll undermine credit
mhm,
on those real estate
mhm.
assets, and that'll undermine the credit markets generally. That's going to be a dramatic shifting in mindset, and I think will drive interest rates lower because again, these debt levels are unsustainable. We're going to have to deleverage through basically inflating the debt away.
Absolutely. We are approaching 23 trillion in the US federal debt. Who would have thought on
Yeah,
that?
and debt service in the U.S. has doubled in the last 18 months to $1 trillion a year. That's one out of every $7 of tax revenue generated in the United States. If they raised interest rates another couple hundred basis points, for example, they would double debt service again.
Mhm.
It would bankrupt the U.S. government. And this is obviously the most developed economy in the world. But can you imagine what's happening in the developing world with the debt levels they have?
Yeah, a total nightmare, I would say. This is why you have to own gold, and this is why you should own gold royalty, I would say.
Exactly.
Absolutely. Super. David, thank you very much. Always pleasure talking to you. Thanks for the update. I would say you guys are really on the right path, on the growth path, of course. And yeah, please make sure we get all updates from you guys. And yeah, please us with probably the next year already some higher dividends.
Yes, well, we'll see. Well, hopefully, we're going to see certainly be some significant revenue growth. And
Yeah.
I, as I said, watch the space. We will grow the dividend over time. I'm quite confident of that, given the scalability of our business, our low G&A, the significant growth that we have. I think will drive our revenue up and drive our dividends up over time as well.
Super. Perfect. Thank you very much, David. All the best. Thank you. Yeah, ladies and gentlemen, that was David Garofalo, the CEO of Gold Royalty. Yeah, you heard it. The company is fully on track. No net debt, nothing here. The company is fully cashed up. They are earning more and more. They have a 60% CAGR for the next years. And yeah, I must say, if you buy into Gold Royalty, as I did, really at a higher price, actually today you get it really, really cheap, I would say, for the stock price. And also our charts call for a bottom here that looks really interesting as an entry point. I would say you buy really definitely how can I say that, a share in the best gold mines in the world, where you make sure that you get a part of the revenue. And that is a fantastic business model. And as David said, 222 royalties they have now. Ladies and gentlemen, that's really a lot. This is organic growth. This is what you want. This is not any expensive mergers or M&As. They just do it by themselves and grow the company very solidly, very healthy. And we look forward to higher dividends. So I would say the stock price is also ready to move. Thanks for watching us, and bye bye from Switzerland.